So we now like to take questions from the floor. If you have any questions, maybe ask you to kindly raise your hand. All right, then we'll go to the gentleman in the front row. We'll start from you. Thank you. Allow me to speak in Japanese. Yes, that's fine. Please speak in Japanese. I'm with SMBC. Kikuchi is my name. Thank you very much. Thank you for the presentation. I have two questions. The first question. Well, you want to change the new business model. You want to change the business model. You want to change businesses. Up until now, Dimension Data, your performance, the operating profit margin did not improve that much at Dimension Data so far. So why was that? That's the first question. And also, second, you have now added the data center assets of NTT Communications as that, but I think combining a data center of NTT Communications with Dimension Data, how can that lead to improved recovery? I cannot understand how that can translate into improved recovery. And so the reason why Dimension Data's profit margin did not improve so far, why was that? So that's the first question. The second question is that if you want to improve the operating margin, combining data center assets with communications along with that suffice. Aren't there missing pieces? So what are the missing pieces for your operation to significantly improve our operating margin? What resources would you like to add? So these are the two broad questions. Thank you.
Good, right. Thank you very much. To answer your first question around the Dimension Data operating profit, if you look at Dimension Data, a large part of the revenue within Dimension Data was technology resale revenue. And as the market has continued to transform and moved away from hardware-based technology to software-based technology, there continues to be pressure and commoditization on that technology, on those technology margins. So one of the challenges that Dimension Data had was too much of their revenue was commoditized at very low margin. In addition to that, some of their services relating to those hardware went away, because when you have a software-defined architecture, some of the services that you had around support of hardware obviously went away as well. So those were the challenges, I think, fundamentally that the Dimension Data business was suffering with. Your question around the data center, I think a couple of things around the data center. The data center market itself, so outside of the collaboration, is a very good business. So if you look around the world and other data center companies, Equinix and Digital, in their financial performance, it's a fast growing. I think they're probably growing about 17 or 18% per annum. So it's a fast growing part of the market. We as a company also got very high margins on our own data center business. So firstly, the data center business as a standalone business is a good business in a good growth part of the market at high operating profit. What it also allows us to do, though, is as we move into a hybrid cloud, we can start to put some of our clients' infrastructure next to some of the hyperscalers, and we can start to provide that hybrid cloud environment where they move workloads between a hyperscaler environment and their own environment. So we do believe, and we can provide obviously a managed service in our own data centers. So I think a combination of things. The data center business as a standalone business is a good business in a fast-growing segment. Secondly, as we bring together some of the other capabilities like our managed services, etc., we think we can also leverage the fact that we have data centers better.
Thank you very much for that. Thank you. So let me go on to the second part of my question then. Earlier, you talked about one NTT. So I would assume that you're going to be collaborating with NTT Data as well. Now, NTT Data is able to provide applications. They have resources. They have 100,000 personnel outside Japan. So how do you intend to cooperate with NTT Data with such large resources outside Japan? What are the possibilities of your collaboration with NTT Data? And also, what are some of the possibilities you see in the short term this year and next year? So if you have any plans, I would appreciate it. Thank you very much. Well, thank you very much. Since you referred to NTT Data Group, so allow me to respond to that question since you referred to NTT Data. Well, as we mentioned earlier, This time around, so Dimension Data, NTT Communications, their assets were brought together. So we want to make sure that we're able to leverage this synergy. That's the basic part. As was mentioned earlier, so client engagement that Dimension Data has, and NTT Communications managed services, these will be brought together. NTT Communication services are outstanding, but they don't have the scalability. So combining Dimension Data scalability and client base, we can realize the scalability. Actually, already 30% of revenues have operating margin of higher than 10%. We want to make sure that we focus on high profit part, and we want to make sure that we increase the percentage of a high profit business as part of our portfolio. And also, we talked about the need to take defense. Improved efficiency. So first, we want to make sure that within NTT Ltd, we create value through streamlining, and that's what we want to do over the next year or two. Now, as for NTT Data, they are engaged in similar activities as well internally. So at the high level, naturally, from the client perspective, data is very good at verticals. However, the NTT Ltd is good at the horizontal, if you will. And so a combination of both will represent a good value proposition. So NTT Inc. will be the center of this. In the case of very large clients, or in the case of Smart World Initiative, NTT Inc. will be driving these initiatives. So in the next step, how can we leverage the assets on NTT Data? That will be discussed in the next phase. So that's what we're talking about at this moment. Thank you.
よろしいでしょうか。
Have we responded to your question? Thank you very much. Next. So we'll go to, let's see, the gentleman in the second row, in the center, in the white shirt. Thank you for your explanation and presentation. I'm with Mitsubishi UFJ Morgan Stanley Securities. Tanaka is my name. I have a question. You talked about 15,000 large client base. So you have very rich client base. But on the other hand, when we focus on Dimension Data's resale activities up until now, when you consider one entity, I think you're going to have client base whose revenue will have to decline. You're going to have client base. Some of your client base will probably see a lessening of their sales vis-a-vis NTT. So when you want to expand into new services, you probably have to compete with competition. It could be that also your client base may switch to your competition. So is there a possibility that as your existing client base changes the business model, you could be losing business with your client base? And also, do you see some very tough competition out there? Who do you see as very tough competition for you? Thank you.
Yeah, thank you very much. So you're right, we are fortunate to have 15,000 clients to start. I don't think as a result of the integration, we will lose clients purely because of that. And the only clients I guess we would be at risk with would be clients that saw NTT as a competitor, so service provider type clients. And already they know that Dimension Data has been owned by NTT. So I don't think there's a massive risk as a result of the integration necessarily of losing clients. We definitely have a risk around normal competition around losing clients. And in some cases where our relationships are only technology relationships, we probably have more risk of losing. Where we have more than technology services, we generally find that we are more secure in that client base. Interestingly, the stats, and we measure them around client churn, are actually quite low. So traditionally, we do a pretty good job of keeping our clients. Like any company, though, 20% of our clients are the majority of our revenue. So we need to focus on the top sort of clients that we have. But the real opportunity that we have is how do we cross-sell a much broader range of services that we now have into that client base. And I think that's a real opportunity. When it comes to competition, there's definitely a competition in each silo. So if you look at us in the data center environment, obviously we compete with Equinix and Digital, as I mentioned before. If you look at our business around managed services, there are other managed services players. If you look at our business around networking, software-defined networking, there are other telco-type players who could obviously compete with us. So when we go to market in our individual silos, there is competition. I think the two advantages that we have, one, not many companies have the geographic footprint that we have. So there are not many companies that operate around 70 countries or regions around the world. As you know, most telcos are quite regionally based, and most service delivery companies are relatively regionally based. So I think that's the one thing. And the other thing is where we find we are more successful. And before we even did the integration, we sold about $4 billion in cross-sell opportunity. So where we start to work closer together, and we start to bring data centers together with managed services and putting the equipment in the data center, we're more successful. So in order to beat our competition, and it's less competition when we start to integrate our offerings.
はい、ありがとうございました。
はい、よろしいでしょうか。
Thank you. Next question then. Yes, shall we go to the gentleman in the second row, please? Thank you very much. My name is Ando from Daiwa Securities. Thank you very much for this opportunity. I just have one question. For the next 2 years or so, well, we focus on the next 2 years, let's say. For those of us who are investors, how can we track the progress of your operation for the next 2 years? Can you share with us expected milestone? It could be qualitative. Can you share with us a milestone that based on which we can track your progress? For example, what are you going to do in the first 6 months or so? What about what do you intend to achieve in the first half of the year and the second half of the year, for example? If you can share with us some milestone based on which we can track your progress, we would appreciate your sharing those targets with us. Thank you.
Okay, thank you very much, and a good point. So internally, we have a very detailed 2-year integration plan that we've actually broken up into 3-month or 90-day sort of runs. We monitor and measure them on a monthly basis, and we have KPIs set up for that plan. So we have a very detailed integration plan. I'm not sure, Shimada-san can talk about how we're going to communicate and what level of detail we're going to communicate to the market. But certainly internally, as you can imagine, we're very, very focused and have a lot of short-term plans to get us to our medium-term goal. But I'll let it up to Shimada-san as to what the plan is to actually communicate that to investors. I'm not sure.
Well, let me add. So we want to improve 2.8% to 7% in the next 5 years. So you talked about the first 2 years. Jason talked about defense. As far as this part is concerned, in the next 2 years, we want to execute the streamlining part of the business. Of course, there will be one-time cost, but as soon as possible, we want to translate into profitability naturally. Now, as for services, we have two. First, we already have profitable businesses and services. Now that we're together with Dimension Data, we'll be able to brush up the processes. So already competitive products, we want to continue to deliver those products. These are long-hanging fruits. So we want to make sure that over the next 2 years, we leverage the long-hanging fruits. Now, these services have high margin. It's very valuable, but if we do nothing about it, then they will become outdated. So it's important that we continue to reinforce the competitiveness of already competitive products. But we need to take time to further reinforce the competitiveness of already competitive products. So that is going to be the long-term plan. So we're having internal discussions about this. So at the right timing, I hope we'll be able to share those information with you at the appropriate timing going forward. So we'll go on to the one final question. The gentleman in the front row, please. Thank you, Masuno from Nomura Securities. I just have one very straightforward question. On page 9, you talk about you want to make sure that you want to change the growing strategy from 30% to 50%. That's 3.3 billion. 50% means 7.5 billion. So that's what you want to do. But 130% growth over this period and 20% growth. That seems quite significant. So simply put, how do you intend to achieve these goals that you have on page 8? That's my question. Can you elaborate, please? Thank you.
As I mentioned, if you look at where most of that growth is going to come from, one area is data center. So data center, the overall average is growing at about 9% per annum. But within that, if you look at, and we're number 3 in the world, if you look at the other two competitors in that space, Equinix and Digital, they are growing at about 17 or 18% per annum. So we think the part of the market where we're growing in the data center will contribute to part of that. And you're right, it's about a 16% compound annual growth rate over the time. If you look at managed services, as I mentioned, is about a 7% growth from a market perspective. But within that, sort of on-prem managed services, so old-style delivery of managed services, is the market is growing about 5%. New platform or cloud-delivered managed services is growing about 19%. So, to answer your question, if you look at the parts of the market that we're growing in, we're actually trying to grow pretty much around where the leading players in those market segments are growing.
Thank you. This will be the very final question. Thank you very much. Two questions, if I may. My first question about the cost reduction. You took $200 million cost reduction. That's what you are aiming for. So that would expand your profit by 1/3. So at what pace do you intend to carry out the cost reduction of the 5-year period? What are your thoughts? And also, how much cost will be required to transform the cost structure in your company going forward? Thank you.
So I'm not sure when you say what base will
What pace? No, what pace?
Around the cost reduction to get to the $200 million. As I mentioned, there's how do we digitize and automate the shared services at the back end? The first initial sort of take on that will be spans and layers. So in other words, as we bring the organizations together, there's going to be cost savings from a headcount perspective, and we'll see those earlier in the process. The digitization and the G&A excellence programs will take longer to roll out. We've already seen some of the advantages from procurement. So there's some short-term procurement advantages as we brought the companies together, and I think those will continue more or less equally over time. We have to engage probably with about 200 vendors over that fullness of time. We have a dedicated team looking at that. Office relocations, we've done some as I left. That also takes a bit of time because we have to negotiate outstanding leases and things like that. So it's going to phase over that time period. From a timing perspective, I think the initial stage will be the headcount reductions as a result of bringing it together. We'll get some benefits from automation of standardized processes, but that'll probably be over the 2 years. And procurement and office benefits will also be over that time period. From a cost perspective, we believe it's going to, over the next sort of 2 to 3 years, be about $200 million in integration costs over the next 3 years.
Sorry, a point of clarification. You had $200 million cost. You're spending $200 million in order to save $200 million. Is that what you're saying?
So it's going to once-off integration costs and headcount costs will be about once-off $200 million over 3 years. The ongoing savings will be $200 million. So they're annual savings.
Thank you. My second question. Thank you very much. So in the midterm plan for NTT, they're going to improve ROIC by 1%. That's the midterm plan for NTT. Now you have a new structure. I'm not sure to what extent you are aware of these figures, but at this moment, what is the ROIC, return on invested capital, at NTT Ltd? How much is that? And also, as your profitability improves, I'm sure your return on invested capital will improve. But what type of ROIC do you want to achieve over the next few years? In other words, so that's my question. How much return on invested capital do you intend to achieve? Thank you.
Yeah, we'll have to come back to you on that. I'm not sure the return on invested capital. Obviously, as we go forward, there's a lot of asset investment, and we've had asset investment in the past, but I don't have that information. We'll come back to you.
Allow me to respond to that question. Naturally, we have yet to see concrete profitability at this moment. So the ROIC level is still low at this moment. But then, as the company generates profit as we envision, then they will begin to contribute to the consolidated entity's ROIC down the road. That is our thinking. So it's not so much the focus is not on now. once they become profitable, I'm sure that NTT Ltd will make a positive contribution to NTT consolidated ROIC. Thank you very much. That's all for my question. Thank you very much.
はい、
Well then, we would like to conclude the very first presentation session. Thank you.